Tuesday, September 24th, 2019, Maneco 64, home of alternative economics and contrarian views. This morning, I want to look at the gold-silver ratio, how silver led the way yesterday, did very well, and how that ratio is pointing again to the precious metals, most probably resuming its way higher. The bull market that we've seen start since the end of May, where we've seen gold break out through that 1375, 1380 level and go all the way up above 1550, right? And also, by the way, make all-time highs in almost all major currencies, with the exception, of course, of the dollar, the Swiss franc, and the Chinese currency. But all the other currencies, we've seen all-time highs. And I want to talk as well a little bit about some of the data that came out yesterday, especially for Germany, and what that means for the world economy. So we'll go through the German data right now. Then I'll talk about the gold-silver ratio. And then at the end, I'll look at where the markets are. Change things around a little bit. So before I go through the German numbers that came out yesterday, Germany is the fourth biggest economy in the world by GDP. It has over $4 trillion of GDP. That's the German economy. In 2020, it's expected to grow almost at $4.5 trillion. So the US is number one, China number two, and Japan number three. And apart from that, Germany is also the third biggest exporter in the world. So the fact that the German data yesterday were not good is a bad signal for the world economy overall, because if Germany is not exporting, it means that the rest of the world is slowing down. So what were these numbers? Well, we had the yesterday for Germany, we had the German manufacturing PMI, and Germany, of course, is a manufacturing powerhouse. That's what it exports most. It doesn't export commodities, sugar or coffee or cocoa. It's manufactured goods. We all know about the German engineering, right? So their manufacturing PMI was already weak the previous month. It was below 50. These PMIs are surveys they do with purchasing managers in the manufacturing sector. And any number below 50 means that the sector is contracting. So the previous month was 43.5. This month, the forecast was for a number of 44, and it came out at 41.4. So not a great number at all. And that dragged down the EU PMI, manufacturing PMI, that was expected 47.3 to 45.6. So that was the bad number yesterday. We saw stock markets in Europe go lower after that number. Today, again, we've got another German number that's coming out in a couple of hours. It's called the IFO, German IFO Business Climate. That's a very important number. I remember when I worked in the markets, that was one of the big numbers out in Europe. So there you go. World economy not looking great. So what about the gold-silver ratio? If you've been following me for a while, you know that I've talked a lot about this gold-silver ratio. That's when we see bull market in the precious metals, that silver leads the way. Since the end of May, that didn't happen. Gold was outperforming. Around the middle of July, silver started outperforming, right? So that was a good sign. And as you can see here, this ratio, we got up all the way to 93.5, which meant that you needed 93.5 ounces of silver to buy 1 ounce of gold. So this is basically what this ratio is. So when the ratio is dropping, it means that silver is outperforming. And So if you look at the past bull markets in gold, we know gold bottomed in 99, 2001, around 250. But that ratio kept going up until around May of 2003, as you can see here. And it was only after that, when it started going down, that we saw gold really zoom higher towards 1,000, just above 1,000 in the beginning of 2008. But you can see there already that that ratio was bottoming, though, so it was pointing to a correction in the precious metals, and that's what we saw from 1,000 to around 780. Very quick correction, as you can see there. And then we went back up to around 80, which seems to be a key level. And then from the end of 2008, beginning of 2009, that ratio dropped massively again towards like 32. And that's when gold and silver traded higher. Gold went up to 19, above 1900, and silver got up to almost 50. And ever since then, that ratio has been going up. In 2016, it topped just above 80, came down, but went back up. And recently, it even went through the 80 level all the way up to around 93, 94. And right now, as you can see, it's dropping again. This is a long-term chart. So I think the 80 level is very key now. And we're going to continue, and we need to see this ratio continue to drop. Of course, things don't move in a straight line in markets, as I said many times. So here's the daily chart again. So you see how it's been. It's been quite a wild ride since we started turning down in this ratio. It bottomed around the end of July, 24th of July, went up. Then it's pretty much went straight down to the beginning of September, broke through 80, and then it's just rebounded back towards just above 85, and now it seems to be dropping again. So now the key level below there is going to be at 79, and it looks like that's where we're going. I mean, you don't need to be have huge experience in technical analysis to see that that looks like it's going down again. So that looks good. That's what I wanted to talk about as well. So now let's go and see where the markets are and wrap up the video. I'm a little earlier today. It's 10 past 7 a.m. London. So precious metals have come off a little bit here today. Gold not so much. Silver a bit more, but nothing huge. Spot gold is at 1590.80, down about $2, 0.15%. Silver, which rallied about 3.5% or more yesterday, is now down 1% or 18 cents at 1844. Overnight high has been 1875. So just a little bit of a correction, I would say. The Dow up 97. Yesterday, stock markets finished flat, basically, but it's up 97 right now. The futures at 27,050, 1/3%. S&P up also just over 1/3 at 3,248, up 11 points. NASDAQ 100 future up 33, just under 0.5% at 78.50. Currencies pretty quiet right now. Sterling is unchanged, 124.35. Euro is at 109.89, also unchanged. So the currencies haven't started moving. Dollar is also unchanged against the yen, 107.55. Yesterday, even though precious metals went up, the dollar was fairly strong against the European currencies. Dollar is down a little bit against the yuan. It's at 710.33. Crude oil, WTI is down 0.5% at 58.25. Brent up. Brent is down 2/3% at 63.46. And to end it, let's have a look at the bond market, which is again very volatile. We're now down to almost 170 in the 10-year yield. We're at 171. Recently, we went up to 190 from like 140. So a lot of volatility in the 10-year or in the bond markets. Yields dropped, I think, at one point yesterday, 8 basis points. The 2 years at 168. So 3 basis points difference, still not inverted. So that's the other thing I wanted to say. The repo market, for example, they lend treasuries, right, as collateral overnight for cash. Maybe this volatility in the bond market isn't helping either, right? Because even though it's just for one day, if treasuries are moving so wildly like that, do you really want to take that as collateral? So maybe not only are people worried about some banks, maybe other counterparties, and don't want to lend to them, maybe they're worried about treasuries not being that much of a safe haven anymore. Just a thought. So there you go. Let's see what happens today. Keep an eye on the German figures, IFO or IFO. You can call it either way. It's out at 9 a.m. London time. So very early in the States, but that was my job in the city. I had some American clients. When they came in fairly early, I would tell them what had happened, how the IFO came out. If you enjoyed this video, make sure you hit the like button. Subscribe to the channel if you haven't yet. You can also follow me on Twitter, Steemit, and on DTube. I wish you all a great day. Take care. Bye.